Special guest John McMullen with the Mortgage Bankers Association joins this episode to detail the MBA's ongoing advocacy efforts that culminated in direct game-changing policy changes with Fannie Mae and Freddie Mac.
Lenders today face warehouse line exposure risk, and borrowers are stuck with multi-close complexities. We believe a GSE endorsed securitized single close product would de-risk delivery and streamline the borrower experience. A 50% threshold will open the door to more authentic renovation activity, especially for older homes or disaster damaged properties. These changes prove that when policy meets the reality of the market, everyone benefits, the borrower, the lender, as well as the broader housing ecosystem.
I'd like to welcome everybody today to the Construction Lending Podcast. I'm your host, Sean Ferris, CEO of Land Gorilla, and we've got a great guest for you today, John McMullen, AMP, Senior Policy Specialist of Residential Policy and Strategic Industry Engagement of the Mortgage Bankers Association. John, welcome to the podcast.
Thank you so much, and I'm so happy to be here. This is a very important topic.
Right off the bat, I think you have the best title of anybody that we've had on the podcast. That thing has some good punch to it.
Hey, I'm just trying to do what I can to serve the industry.
Now, tell me, what does that title mean?
So we have a residential policy team that comprises of state, local government. We have industry engagement. We have legal, well as secondary and capital market. So it pretty much encompasses everything that we do. We touch on various aspects on the policy side, on the single family side.
That's great. I love it. And which kind of brings us to the main topic of today's podcast, which is super exciting.
Yep.
Super exciting, and I think we'll just jump right on into it. But earlier this year, there was a letter that came out of the MBA, and I think somebody emailed it to me. And as I'm reading it, my phone rings, and my dad's calling. He's like, "Did you read that letter?" I was like, "I'm halfway through it right now. Hold on, let me call you back." Like, this is probably the most exciting thing that I've read. I was like, "Can you believe that they said?" I was like, "Yes, it's about time." And if we would have been in the same room, I think we would have been doing high fives and chest bumps, and just could not have been more excited when reading this thing. And it just was kind of meeting after meeting, talking to everybody about it. Like, well, what does this mean? I was like, exactly what it says. And for our listeners here, I'm going to give you the subject of the line as we dive into it. And that is policy recommendations for enhancing construction loan process efficiency and flexibility. It's not just a letter, but who it was directed to.
Yeah.
Right. And
we sent it to Fannie and Freddie Mac.
Fannie Mae, Freddie Mac, and the head of their single family divisions, right?
That's right. Yep.
Okay. And where did this letter come from? I had no idea that you guys were working on this, but what drove you to write this letter?
Yeah, so the letter was a targeted effort. We convened leaders who've been actively originating construction loans and had been facing some severe operational friction. They weren't necessarily theorizing that they were in the trenches, but they told us about some of the building delays, the requalification issues, and warehouse line issues. And that is what essentially triggered the formation of the working group. Now, as for timing, the letter was drafted in late 2024, but we waited until leadership stepped in. William Bill Pulte at FHFA, there was a unique opportunity to elevate these issues and have them taken seriously by both the GSEs. So the strategic delay essentially paid off. And we just recently got some new news that came in from Fannie Mae earlier this week.
Oh, that's okay. Hold off on that news right now. Let's hold off. Let's lay some more groundwork to what the heck are these guys talking about? So the leadership change that we're talking about is, hey, you guys had this letter to going like right up into the election. Trump gets elected. We shouldn't be sending this letter out because, there's going to be some sort of transition happy place. Let's find out who's going to be taking over FHFA and let's see where the dust settles. Then let's send the letter. That was the strategy, right? Like, we want to make sure somebody reads this letter.
Yeah.
And
absolutely.
Do you know if anybody ever read the letter over there?
Well, yes, the letter was eventually read, taken seriously. We had multiple conversations with the GSEs to point out clarification. We looped in some lenders to give a little bit more color, some of the thematics. They like real-time examples. And so all this was accumulated to essentially make a decision. So yeah, the letter was eventually read.
It's such a big deal because, I mean, Land Girl is on its almost 16th year right now. And this is
Wow.
something that we've watched election cycle after election cycle. We've heard politicians talk about the affordability crisis. And then here we read this letter that really focuses on policy and a program that can do something. We're talking about construction and renovation in this letter. I mean, I viewed it as like almost like a shot across the bow. Like, hey
Yeah.
guys, you need to take this seriously right now. Wake up. This is an emergency
Mhm.
and you need to act on this.
Yeah.
Now, when you send these types of letters, do you normally give them a heads up that this is coming? Like, do they know it's coming, or do you just like, hey, surprise?
There's typically a heads up. So we have a working relationship with the GSEs and FHFA. So we're in constant communication. So there's definitely some ongoing conversations that, hey, we have some lenders, they want to provide feedback. We'll have it done by X, Y, and Z. So yeah, there's a lot of transparency in those conversations.
That's awesome. And getting into a little bit more, everybody's probably going like, did I miss this letter? Like, what are they talking about? What's in the letter? They're probably
Yeah.
Googling it as we speak. But the overall gist is focusing on construction and
Yeah.
three big, I'll call them pillars that you try to drive home or points to action that
Mhm.
you're asking for. The first off in there is pursuing a pilot program that permits upfront securitization of its single
Mhm.
close construction to perm loan product.
Mhm.
I know what that means, but you tell me in
Mhm.
your own words, what should people be thinking of when they hear about securitization of a single close construction to perm loan?
Yeah, so lenders today face warehouse line exposure risk, and borrowers are stuck with multi-close complexities. What we believe a GSE endorsed securitized single close product would de-risk delivery and streamline the borrower experience. It's kind of the two that unlock scale, especially for mid-size and non-bank lenders who essentially don't have the cash on hand as a major bank would to essentially originate, push loans through their pipeline there. So
So
this
in
was
Yeah, I was gonna say, like in simplest terms, is hey, if I'm a mortgage banker, I would have to keep that construction loan on my warehouse line, not for 15, 30, 45 days, like a traditional mortgage. I got to keep it on there
yeah.
for 12 months or 18 months
Yeah,
until the
yeah.
home is actually completed and then
Mhm,
sell it.
mhm.
So if I think of how many ever millions or of dollars that I have in warehouse capacity, each construction loan I put on there takes up some of that capacity that I could use for
Mhm.
regular loans. I'm almost deterred from originating construction loans and carrying them on my warehouse line.
Yep.
What this does is it shifts it over and puts it in that quick bucket of, hey, get it off your warehouse line really quick because you can
Mhm.
immediately sell it and securitize it. Is that
And security does it. Yeah.
so? Do you envision this to be very similar or really similar to like the USDA's version where you can close it, it's immediately insurable and securitizable? Like, is that the idea here?
That is the idea. And in our letter, we asked that there be coordination with USDA to pull their data to ensure that it aligns with that, because we've gotten some really good feedback that it has been a good, valuable tool.
Yeah. When I think about this, that's probably one of my favorite loan products out there is the
Mhm.
USDA construction loan, immediately securitizable. Like there's so many little cool features in that
Now, is it your favorite because your father played a part in it, or you just really like the
well,
practicality?
it's a little bit there, but when you start talking to somebody about it, it's like, hey, you can put 1% down. Like, what? You can do
Mhm.
that? And you can build in an interest payment reserve. You can have a contingency. The limitations being kind of the USDA overlays of, I think it's like certain income limitations.
Yeah.
And that's great, but that's the limitation. Then not everybody can qualify for that. The GSEs and whether it's FHA or VA being able to offer similar products, I think it's kind of a no brainer to me.
Yeah.
But also, I think the other really huge benefit is, when you get a construction loan today, a lot of things can happen, but I don't know what my permanent interest rate is for 12 months. And as a consumer, that's risky to me.
Yeah.
A lot of things can happen in a year
Yeah.
and your payments day one. Your home gets completed in a year. You've got probably 29 years left on a 30-year mortgage instead of being year one and establishing payment. Like there's just so many benefits. So they get this letter. What kind of feedback did Fannie and Freddie give you when they started reading this and go, oh, this is really interesting? Did they just poo-poo it out the gate, or did they say, hey, yeah, no, this is some really powerful stuff, or we've already been thinking about this? Like, what was the conversation like?
Yeah, so the conversation was, I felt like, productive. So a few years back, around 2018, Fannie Mae had some conversations with lenders at that time to potentially roll out a pilot program. But due to administration personnel changes, it was essentially put back on the back shelf. So what they encouraged us to do was to collect data, which we've been working on with members. And that would be essentially a next step to kind of move this forward so that we can make construction lending a little bit more viable for our members. But they didn't necessarily shut it down. It was something like, give us a little bit more data so that we can understand how would this be helpful for the lender, the borrower, as well as the investors.
That's great. I mean, that's really positive, very promising. And if anybody's listening from Fannie or Freddie, you want to make an impact on housing, this is where we start. I mean, there's an army of originators out there that are hungry for this, an army of people that want to go to work to be able to originate these types of loans, but they're limited over warehouse capacity. They're limited over competing factors. This just removes some big barriers and all of a sudden turns a no into a yes, I think. And I think it's the type of program that can make a profound impact.
Yep.
You know how I feel about that. I know how you feel about that. And we're going to keep our fingers crossed that we can really see that movement. Now, with number 2 in the letter, this one is really cool. And I don't think the timing could be any better to talk about number 2. And this is extending the permitted age of documentation to 18 months for qualifying single family or single closed construction-to-perm loan. So some context, I'll kind of fill the context. I believe the standard was 4 months, 180 days, is somewhere in there. I think it was
180 days up
180
to 12 months. And a lot of members have gone over that 12-month threshold. So 18 months would essentially reflect construction realities.
And if you do any construction to perm lending, this one probably stands out as a sore thumb as being the stupidest requirement, because Fannie is not buying the loan until it's delivered, and the home is complete. But to go through, you've already made this construction loan, right? And now you're going to throw this kind of wrench in it down the road saying, oh yeah, we also need to update some documentation, which includes the appraisal, I believe, which is another big kind of scary thing that sits at the end that could almost tank an entire portfolio. So now they've extended that time to be a more comfortable period of time, saying, hey, it's good at the beginning. It's good 18 months later.
Yeah.
And that actually, there was an announcement this last week. Was it early this week?
It was just this week. Yeah. It came out of Fannie Mae's selling guide announcement, SEL 2025-09.
And what did it say? Is this the exact thing of what they took action on?
This is it. Yeah. So it extends the window to 18 months. So this is a direct result of MBA's advocacy. It aligns credit policy with real world timelines of today's construction.
Huge win.
Cycles. Yeah.
Huge win.
Yeah.
I think the icing on that cake, when I read it, I was like, okay, when is this going to go into effect? And you see the fine print, it goes effective immediately. And I'm like, oh, sweet. So this can actually apply to existing construction loans that construction lenders have made. So they don't have to abide by the 4-month rule in there. And now it's 18 months.
Yep. Absolutely.
Home run. If you read the letter, if you listen to this podcast, this is the best thing. Big, big win for everybody else that's in there. But it seems like, hey, they really listened to the letter and they took action relatively quickly.
Yeah. Lenders have been advocating for these changes for a number of years. I think it was MBA's voice. We had a little bit more weight and we were persistent. So it goes to show you, when you put persistent expertise to the forefront, there are results that are brought to the forefront. So
we need these like gold star stickers to be putting up there for the MBA. I mean, these are huge advocacy wins on behalf of your members. And this one's really exciting to see. Now, the third one kind of left me scratching my head a little bit. As I'm reading the letter, I was like, where did this come from? I was like, this one's kind of interesting. But the more I thought about it, and the more I talked to other construction lenders out there about like, what kind of impact do you think this one has? Then the wheels started to turn. And then when we talked about this prior to getting on the podcast, I mean, you even shed some more light on it. And number 3, I'll just read it kind of word for word in the little brief, is lower the completion threshold from 90% to 50% for home style renovation loans, meaning that the home, in order to be able to get the loan, to do the loan today, an existing home has to at least be 90% complete.
Mhm.
And now it changes it to, hey, if the home's 50% complete,
Yeah.
you can get a renovation loan.
Right. Yeah, because 90% is not really a renovation, is essentially a new build. So a 50% threshold will open the door to more authentic renovation activity, especially for older homes or disaster damaged properties. And of course, there would be means for guardrails. We propose the verification method like process inspections, draw schedules, contractor affidavits to mitigate risk. So
And,
yes, we're working on
escrow
clarifying.
accounts.
Yeah, exactly.
Okay. And what drove this one? Was this coming just straight from the advocacy group? They're like, hey, it used to be 50%. Now it's 90% and it's not nearly as good. Can you push back for that 50%? Is there any quality difference between 90 and 50? Like, how did that work?
Yeah, so this comes directly out of the working group. So coming from 90 to 50, it will essentially expand the volume of eligible properties for Fannie Mae, increasing market participation because the construction is about 5% of the mortgage participation. So essentially, we're trying to increase additional participation into the market.
Yeah, no,
That's
so
what I was trying to say. Yeah.
help me understand this. So the way I was thinking of it is, hey, I've got a construction to perm loan. And I was thinking about this change to home style renovation under the umbrella of how does this work with construction loans?
Mm-hmm.
So today you have to wait for a brand new home being built. It has to be at least 90% complete to get a home style renovation loan for it, right? So they could be wrapping up the inside of the home, not having the landscaping done. Now you qualify for financing and it can actually be a home style renovation loan, which is really cool. But essentially what this says now in the context of a construction loan is, hey, I could be the borrower on construction to perm loan. And as long as I get that home at least 50% complete, I can now qualify for a home style renovation loan, which is fully amortized. I know what my payment is. There's no floating interest rate in there. And as long as I get to that 50% marker, now I can get this, I think there's a little title complexity in there of an open construction loan, refinancing in an open construction loan with a home style renovation loan could be really cool. Right. And
right.
When I think about it, when I talk to other construction lenders, how this can be, it's like, hey, you can true up the contingency account. You can have a new interest reserve built in there. You can account for some cost overruns. You may have gotten into trouble on the other one. Like, I almost viewed it as just like this super tool.
Early intervention mechanism.
Yeah, like a super tool that can help out in situations. As long as you get it to that 50% mark, the sky's the limit. You can have that great benefit of knowing what your final payment's going to be, and financing the whole thing. So you're going to be paying interest on the fully dispersed amount, but your mind just starts to go like, oh man, this covers a lot of situations where the project may be having issues and you almost start over, redo, going to come to mind, but it's a really exciting tool that lenders could take advantage of.
Yeah, absolutely. Absolutely. And one of the other items that we put into the letter was to, like I said, add additional safeguards. So property inspections, 10% holdback on each draw that would help maintain the builder accountability as well as project timelines. And this is something that Fannie Mae has previously allowed financing for at 50% completion. So this isn't something just pie to skies. It illustrates the practicality of the approach and the benefits of reinstating it.
And even if the home style renovation loan doesn't require you to go update all the documentation.
Right.
I didn't see this one in the announcement. Do you think this one will come to fruition? Like, will we see this one gain some legs and get some traction? Because it could be amazing to see.
Yeah. So I will say that the GSEs have had a very active ear on a lot of the policies, particularly this one here. So there's a likelihood that it could come into fruition. I can't speak for them, but they've definitely shown a lot of interest, and there could be some very well more policies coming out of this.
Now, it's very specific to home style renovation loans, not home choice, the Freddie product. Why home style renovation? Why is home choice not mentioned there?
I think because the challenges that lenders, particularly in the construction, have revolved around the Fannie product more so than the Freddie Mac. I think that has been a little bit more straightforward in the implementation of it.
Interesting. Now we take a step back, kind of reflect on this letter. Like, what do you think the implications are? How do you see the benefits if we snap our fingers right now and all of these are live today? What are the true benefits that the consumers and the public will see from making these changes?
Yeah, well, construction is complex, far more complex today than it has been in the past due to a lot of documentations and just restrictive policies. So this is just a step to kind of push the can down the road to make it a little bit more applicable for lenders and borrowers to get into the space. So I think it makes it a little bit more easier, I would say.
Yeah. Do you follow Bill Pulte on Twitter at all?
Yes, yeah.
Yeah, I love it when he posts. I love it when he posts. And what's surprising is he'll ask for feedback, just reply to this tweet. And, it's like, well, great. I think by the time I replied to one of them, I was already in the thousands. I was like, he's never going to get to this.
Yeah.
I would really love to hear what he thinks about this, because he's a big pro construction, pro home builder. Hey, we need to create more supply type of leader there. Do you see this making a noticeable impact? And here's what I mean by impact, right? We talk a lot about policy changes, whether it's ADUs or permitting or, what are the things that we can do to move the needle? And a lot of times we spend a lot of energy and resources talking about something, but then we get down to is like, hey, how much of this needle are we going to be able to move by this change? And it's like, oh yeah, 1%. Or like, hey, what does it look like when we won? And it's like, oh, I really don't know. It's like, that's a black hole. Maybe we shouldn't do that if we don't know what the goal is here. Mm-hmm. This is actually one of them where we can measure the impact. We can measure the number of loans that are delivered to Fannie and Freddie with a special feature code, right? We can see the impact right off the bat. But I think when it comes to home ownership and people's ability to be able to purchase a brand new home, I know in my soul that this one has impact. I could see people utilizing it. I could see the family, like visually see the families like on moving day going into a new home. So much more personal to be able to experience, construction of a new home and enjoy those benefits. But it also has this immense economic impact when building a new home, right? And think about like these big purchases, like, hey, you go buy an existing home, but you go have a new home constructed. There's the land deal that takes place and the economic activity that happens for the local government there and the taxes that change, and then the home builder and the lumber guy and the person making the windows and, the architect, like all of these, it's like a machine that just starts to go to work, this economic benefit. And I think this one has so many benefits just tied to home ownership that it just gets me like really passionate and excited that we can see these things. We make these changes. We can have this huge impact. We can see people moving into homes. And I just think that's so special to me, and I'm curious, you're a policy guy, you can understand what moves the needle. Do you truly believe this moves the needle at the end of the day?
I think the benefits are immense. When you're particularly looking at this policy recommendation that we suggested to the GSEs, you have more homes completed. You have an opportunity to revitalize some distressed properties. You broaden the access to financing both for builders and borrowers. So I think it certainly is a win at the end of the day.
It's huge. Now, if I'm a construction lender out there and I want to get more involved, which by the way, I want to be part of this working group. I want to get involved and be part of the working group. How do they get in touch with you? How do they get on board for advocacy? Should they pick up the phone and call you? Should they call Fannie Mae? Should they tweet Bill Pulte and like, hey man, this is a good one right here? How do they get more involved?
Yeah, they can do all those things. And I will be particularly open for them reaching out to me and kind of see where they think that we can continue to broaden our impact. And we would love to have them come on board to become a member of the Mortgage Bankers Association. And we certainly would love to have more members within the construction working group. We have small, mid-sized IMBs that represent a variety of different segments of the country, from the West Coast, East Coast, as well as some of the Southwestern regions. So simply reaching out, we can converse and kind of see what the true next steps will be. Welcome all intellectual capital.
That's fantastic. And what's the best way you want people getting in touch with you? We're going to host your email content here on our podcast page. You prefer email? You want them to call you by phone? You want them to write you a letter? What's the best?
Well, I think email would be pretty suffice. Yeah.
And what's your email?
So I can be reached at John, so J, McMullen, last name McMullen @ MBA.org.
And that's Jon or JOHM?
Just J. So
Just
J
J.
for John. Yeah.
J.
Yeah.
McMullen.
Yeah. Last name McMullen, McMullen at MBA.org.
Oh, that's easy to remember. That's really easy
Yeah.
to remember. So, hopefully we'll put some messages in your inbox over that. And, you're definitely getting an email for me to join that working group. Very, very excited for it. Now, at the end of the podcast here, special little segment that we like to call our rapid fire session.
Let's go.
All right. What is a recent product that you've discovered that, was a game changer for you? And for me, I got the Roomba vacuum, that thing is awesome. And I've got my Ember mug, which I do not have on my desk today, but it keeps my coffee temperature the same way, first sip to last sip. Absolutely love that thing. I should be a spokesperson for Ember mugs at this point. Is there something that you've found that you just can't live without?
I would say this vacuum cleaner that I have is a vacuum and a duster that I have for my house. I have hardwood floors. So I have an app that I use. It cuts on about every 3 to 4 hours. And since I've used it for so many months, it has a memory built in. So it knows like the layout of my living room and my dining room area. So it helps to keep everything pretty tidy on the hardwood floor surface. So that has been a game changer because, like when you're always like on the go, particularly here in the Washington, D.C. area, those things can slip up. But I have this little gadget that does that for me. And so I just make sure that I put new Swiffers underneath it to keep it working efficiently. So that is probably been.
Is that the one that you can also, is there like a steamer version of that one too? Or it kind of does it like a wet version or a dry version?
There's a wet version. Yeah. So it's all in one. So it's a duster and a mopper, essentially. Yeah.
Maybe I need to switch.
Yeah. And in fact, it was a Christmas gift that I got from MBA. It was actually the first year that I had started working here. I had bought my house around that time, and we had this raffle giveaway at one of our infamous, if you will, Christmas parties, and I won that, and it has really been a game changer.
Oh, that's awesome. All right, question number 2.
Yep.
Recent book or movie that you've seen that you'd recommend to others?
Yeah. So I'm reading a book called. So these were the questions. I'm sorry. These were the initial questions, but this may be a controversial topic. I'm not exactly sure who's the clientele of who would be reading it, but it's called The Destruction of Black Boys, Understand the Conspiracy to Destroy Black Boys by Juan Kukatunde. So it's an older book written in the 1980s, and it talks about how the school system essentially is failing, particularly for Black boys, what males in general, for how their brains are wired compared to how girls' brains are wired. And there's years worth of data. He's done several reeditions of the book from the 80s up into recently 2010s before he passed away, on what we could do to kind of rectify this. And I think that book, particularly now, should be picked up by particularly educators, advocates who work in the community, when The Atlantic just posted an article and said that American literacy rates are the lowest it have been in decades. So there's certainly something that is happening, not just with Black boys, but with boys in general. Like they're not going to school, they're not completing school, and they're not getting higher education. So something needs to be done.
Very cool. Yeah, I got to check that one out. That it's just so relevant today too. So relevant today. All right. Third question. Have you ever built your own home?
No, I've never built my own home, but after working closely with the working group here, I can see that this need is clearer than ever. And it may be a little bit more easier when I do decide to pursue that option. But no, I've never built my own home.
I love it because the changes that you're advocating for today, you'll be able to take advantage of in the future. Like that's really cool. And last, and probably one of my more favorite questions, but if we can snap our fingers right now, genie in the bottle question, right? If you get to make one policy related request and this wish comes true, what change would you make?
I would say local permitting, because that is the barrier when it comes to the production of not just newly single stick built homes, but modular homes and manufactured homes as well fall within those local permits that are not permitted to be built upon.
I love that one. And I'm always thinking about, well, why does there have to be a permitting office?
Yeah.
We don't have a permitting process here, or, hey, yeah, just pay your $13 fee over here or $100 fee for your permits and you're off to the races. Nobody to tell you what you can build, what you can't. And, I was not the argument was, we know what Walmart's in a residential neighborhood or built next door to a residential home. It's like, well, why would Walmart do that? and there's so many examples where there's just intelligence naturally built into what people do for highest and best use versus having a group that has to charge you money to tell you what you can and cannot do with your own property. I was kind of curious over like, hey, well, what would that impact be if we wake up tomorrow and there's an executive order that says, hey, no more permits?
Yeah.
Right? That was my bad Donald Trump impersonation. No more permits.
Okay.
Gone. Right. And what kind of building would we see? Would we see building permits take off? Would we see affordability dramatically come down? Because you don't have to carry the cost waiting for permits, right? You don't have to pay, in our area, you're close to $100,000 just to get permits, right? And removing that barrier, like you said, just makes everybody one step closer to home ownership. I think it could be really impactful. Any last words before we conclude the podcast?
I'm happy to have been on this podcast. I just want to reiterate some of the items that we've talked about. These changes prove that when policy meets the reality of the market, everyone benefits, the borrower, the lender, as well as the broader housing ecosystem. So you can also read more about that in MBA's news link, a blog that will be sent out in addition with this podcast, which is published this week, and it includes lender quotes, background, and what all this means for the future of construction lending. So I just want to thank you all for listening, and let's keep building.
Where can we go find that podcast? Or that blog, I'm sorry?
The blog, yeah. So you can go to mbanewslink.com and you'll find it. And I will also make sure that you all have that link as well.
Perfect. We'll host it here with the podcast. But John, thank you so much for being on today. Probably one of my more favorite subjects to talk about. And this was fantastic. I learned a lot, and I'm sure our listeners did as well.
Awesome.
Yeah. We'll have you on again soon. Thank you for.
Sounds good.
Bye.
Thank you.
This podcast is intended for educational and informational purposes only and does not replace independent professional judgment. Land Gorilla Inc. makes no representations, warranties, or promises for and disclaims any express or implied warranties related to content. Before acting on any information, you should consider the appropriateness of the information as it pertains to your unique business needs.